Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin. We're going to be taking a look at the technical analysis on BTC. We'll be jumping into some news and data around what is going on with Bitcoin. Now as we get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe. Tapping the bell and selecting all the notifications and you will not miss another video update. If you haven't yet joined us in Discord, what are you waiting for? Check it out. Link for that is down in the description below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into today's video. So let's kick things off with the 1 hour time frame. Here we have BTC paired up with USDT, the BitGet spot exchange 1 hour time frame. We saw Bitcoin break above the $30,000. This has completely changed the structure of what we were looking for. So from yesterday, as you can kind of see, we were talking about looking at this move to the downside at the 28,093 to 28,342. We did say yesterday that it was a bit strange. We come down here, it's possible that we actually truncated and start seeing reversals, and we were looking for 29,425, basically this move up here, whether we were going to kind of breach above it. Breaching above that area was going to be key for us. Also, obviously, moving up slightly higher to 29k. So, complete reversal in the market. And what we have done here is we had the change of character that is bullish, and we got a break of structure to confirm it. So, that's now put us into an interesting structured move upwards. However, it's probably important that we reflect on what changes have been made here, because although this is broken up and we have seen rejection, it doesn't look like this is where it's going to end, mainly because we finished our corrective structure. So, and I say corrective because it's short term, not because it's going down or it's going up. Direction doesn't matter. When I say corrective, I mean the pattern is not a trend. Okay, so if we move this over to here, we can see that we've come up to the 1-to-1. This is not an unusual move. In fact, is very typical of what you would expect to see. We have an A up, a B down, and a C up, and we've completed it. Now, it's possible that you can move up a little bit further here, and we can go up maybe towards 30.5k, but for the most part, this particular structure looks like it is done. Okay, so it looks like this hourly move has completed. However, we are oversold again on our hourly time frame, so we might see a small bounce before we continue a move to the downside. I think a test of the equilibrium is going to be something that we should be expecting. So, this is basically 29,425. That area that we were kind of getting rejected on, or were looking at as our top, has essentially now become a potential for our support level, okay, right here on equilibrium. Now, that was also coincide with our 50 EMA down here. Our 200 EMA actually also might get a bit of a lift soon as well. So we'll find support somewhere around here, I would have thought, even if it is only brief. I suspect that we are going to have to move down a little bit deeper than that in the coming weeks, though, so we'll talk more about that on the larger time frames. But essentially here, if I zoom out just a fraction, you can kind of see we've kind of been really choppy and corrective and always moves to the downside. We've now had this kind of correction to the upside. There is a big bearish situation here that could see us come down more towards these fair value gaps a little bit lower and complete out this fair value gap at the bottom as well. We're not there yet, so we'll kind of see how that kind of looks on the larger time frames. But on this hourly time frame, it does look more and more likely to see a bit of a correction to the downside over the next few days or so. But nothing moves in straight lines. We've come down a little ways here and we are in an oversold position, so I expect a small bounce upwards before we can continue the move to the downside. In sense of where that could go, it's a little bit difficult to see on the hourly, so I'll just bring it to the 15-minute briefly. Here you can kind of see that we are potentially going to just kind of finish this off with a little move down and then a bounce up. So we're not terribly too far away. I would expect us to kind of think about this area of consolidation around that $29,900 range. Somewhere in there would probably be a nice significant bounce that would actually lift us back to the overbought area to bring our hourly in line with our 4 and 8 hour charts. Okay, let's go ahead and move on over, or move back up, I should say, to the daily time frame. Okay, because the daily time frame shows us with this break here just above our 50 EMA, so it's looking pretty strong. However, not everything is as positive as it wants to be perceived. I think this move to the upside has had an unfortunate knock-on effect, that's probably the best way of saying it, with the stochastic RSI. Now, the stochastic RSI, for those who are unfamiliar, is basically really sensitive to price movements. It's like an RSI, a relative strength index, that shows momentum of price action. However, a stochastic RSI is a lot more sensitive to those price movements than the regular strength index, or the RSI, the regular RSI. And so what we need to be considering here is that we are going to be, unfortunately, looking at further downside on BTC on this daily time frame. You can see down here that the stochastic RSI is almost up in that overbought area, and it's had a really small move here. This is an indication of a lack of demand, lack of volume behind the price action. It shows you that there isn't really much momentum there. And you can also see that what we've done here is essentially break above our trend line, okay? And we're talking about these in a really kind of simplistic way, because sometimes these the importance of trend lines is sometimes put, or people put too much importance, I should say, on trend lines. Essentially, these are to be used to help you understand whether or not you are in higher highs or higher lows. And if you have a break above them or a break below them, then you can kind of see continuation of a trend, right, and trend line in what it's kind of spoken about. However, there's probably a better way to use these things than thinking about them as the trend line. I think of these things more as an indication of what is to come based on the opposite direction that is occurring. So, for example, here we can see, and I'm probably not articulating this very well, we can see a corrective pattern to the downside, right? A lot of people will be thinking we're bearish unless we break above it, right? And so they start feeling more bullish around here. And that's not necessarily the right way of looking at these things either, in my opinion. And if you can go through history and just keep checking these things, right? It doesn't really matter where you draw them. But if you were to kind of go around and draw higher highs and higher lows like this, they do have a tendency to want to break on upwards, right? These are bullish, not bearish, right? And a lot of people think that lower lows and lower highs are bearish, but they actually have a tendency to get a break to the upside. And so we need to kind of be a little bit cautious here. When the opposite is true, then you have a break to the downside, right? And different time frames have different scales on these things, but for the most part, as you can kind of see, we broke above this one here, and there's multiple different ways that you could draw it. You could draw it here, for example. You could draw it up there, as I had it before, and it's really going to be subjective to however the analyst decides to kind of draw it on the chart. But essentially here you got a break above it. Now that's great. You're probably going to see this move up a little further, I think, over the coming days. So expect some kind of move to the downside on the hourly chart, the 4-hourly, the 8-hourly, but I think at some point we'll probably get a break back upwards. But we are stuck in a range, and that break upwards is a reset of that trend. And although we are in lower highs here, I think the expectation might actually end up being that we end up dropping down once we kind of retest these highs again and break on down. Now, I think for the most part, we had the potential for a bigger break to the upside. We still do at the moment see that if we could potentially see another run up a little bit higher, maybe towards 30,500 over the next few days after we kind of have those short-term corrections on the small time frames. However, I think as this momentum is indicating to us, it's more than likely that we're not going to see any significant surge to the upside just yet. And instead, we are more than likely going to come back down and go into a new local low. Ultimately, we are above the 200 EMA and we're now above the 50 EMA, but I think this is more of a fake out, a bit of a trap more than anything else. I'm not confident looking at our price action here because it is actually an expanding megaphone pattern, and these are more continuations. So we've had this move down, we have this continuation. Where do you continue to? Well, you continue into the pattern that you kind of broke down from. So you can see here what started this megaphone pattern or this expansion here. You can see that we'll be coming back down from it. So I think we're going to have to be able to kind of be open-minded here to potentially testing that 200 EMA, which sits at $27,000. Ultimately, I think Bitcoin on the daily time frame, it isn't looking as strong as it did only a few days ago. So unfortunately, I think things are not going to be getting better anytime soon for BTC. Moving over into our weekly time frame, wanted to kind of just highlight something slightly different today. We can see the CME gaps. We do have this one up here at the 34,455. 20.65 to 35,180, and we have one down here at 20,330 to 21,110, and then we have a third one down here at 9,665 to 9,925. So there's three CME gaps on our daily chart depicted here on our weekly time frame, and well, yeah, we were trying to moving up towards, we were kind of heavily trying to get towards, in fact, the $34,000 to $35,000 CME. Now, obviously, we have the bearish situation occurring, which are the higher highs and the higher lows across all of this here, and this is basically actually looking reasonably strong on this time frame, right? I'm not too concerned about the weekly time frame here when we have these higher highs and higher lows, because we are just testing the low side of this at the moment, and I still think we have the ability to kind of push on up into this CME gap, maybe even up towards the $38,000 range where there is previous resistance, right? So this is still a possibility. However, if we start losing this trend line on this weekly time frame, I'm not going to be so confident on this anymore. I think we'll be heading down towards the 20,000 CME gap a little bit sooner. Originally, I thought 34 to 35, then down to our CME gap down here at the kind of $20,000 level, and well, there's that bearish situation down there at $10,000 as well. So I think for the most part on the weekly time frame, I'm going to be really close to seeing how this kind of plays out, but I think the weekly close is going to be an interesting one. We want to see whether or not we're going to be able to get this in a nice strong position for basically the next couple of weeks. I think it's going to be kind of touch and go for a little while, so we'll keep an eye on it. We'll continue to kind of monitor the weekly positioning and see how that kind of goes. We're looking for that 34, 35 still, but it's getting harder and harder to see, so we have to be really, really cautious here to see whether or not we want to be kind of, you know, entering into any long positions, or whether or not really short positions are the ones that are going to start taking a bit more of the foreground. Okay, cool. Let's move on over into the data side of the video today. So as usual, membership.𝗕𝗘𝗪crypto.io. This is our membership website where we have on-chain data for Bitcoin, Ethereum, Cardano, XRP. We'll be adding more to that as well soon. We do offer a 7-day free trial on all of our plans, so why not head on over. Link for this is in the description down below. If you're looking for the data, you can get that on any plan at the checkout. Okay, it's not included at its default. You have to add it on later at the checkout. Or there is what we call the mega pack, which basically is full access to everything, including on-chain data. 7 days free trial. What have you got to lose? Check it out. So what we're going to do is we're going to jump on over into the Bitcoin data. I've loaded it up here so we can take a look at it. From an overview point of view, we can see obviously we're 636 days from the all-time high now, which is the longest bear market in Bitcoin history, I believe. And I can obviously go back and check that if I wanted to, which, you know, for the most part, I probably should, shouldn't I? Let's go ahead and check where that sits, because I think it's right in here. So we've got 413 days in the 2013 to 2015. We have 364 days over here. And of course, we've got, well, you know, I guess it's possible that maybe we bottomed out a little bit earlier at 378 days. It still would make that the longest not quite the longest bear market, because the 2015 would have been a little bit longer. So there you go. So clearly that's up right there. So possibly that we're still in it. It really depends on whether or not the bottom is in for Bitcoin, and I'm still on the fence about that one. Another 912 Bitcoin was issued in the last 24 hours. Nothing unusual there. 19.4 million in circulating supply, and all that kind of usual stuff. Now, from liquidations, which is obviously the most important thing that we saw yesterday, was a lot of liquidations going on. Nothing overly major, but $43 million of Bitcoin positions were liquidated. OKX was the top exchange at 11.31 million. 13.96% of long positions were liquidated, and 86.04% of short positions were liquidated. I was literally liquidated not on a Bitcoin short yesterday, but actually on a Matic and V change short, but we'll talk about trades later. So you can see a lot of shorts were liquidated yesterday. Actually, for the most part, it looked like we should have been moving down. All structures were indicating that the move to the downside was likely, but we did see reversal with Bitcoin, which reversed many of the altcoins as well, and lots of break of structures occurred. So as we can see, OKX took top spot. 26.22% of all liquidations was sitting there with OKX. Binance is in second at 25.39%. Huobi in third spot at 24.9%, and I find that unusual. So maybe Huobi are still heavy on the liquidation side of things. It is a bit of an unusual thing to see. To be fair, it's not something I would normally expect Huobi to be in third spot. Normally that's kind of reserved for Bybit, which is sat at 15.58%. So there's actually quite a significant difference there. And I can't imagine there's a lot of people using Huobi as their leverage platform right now. So it's interesting to see that those liquidations are crawling up there. So from a news point of view, what do we see? Well, we did see that about 290 million, I think, or $200 million from Justin Sun was deposited to Huobi Exchange. I find that interesting, but we'll read more into that as time progresses, I guess. This is the only thing that really kind of cropped up inside the news that I found interesting, is that BlackRock insiders say that Bitcoin ETF is likely 6 months away. 𝗕𝗘𝗪𝗔𝗥𝗘. And so there's a few things in here that I don't agree with overly. So basically, 𝗕𝗘𝗪𝗔𝗥𝗘, a digital galaxy, is one of many contenders for a spot Bitcoin ETF, which it reapplied for in June in conjunction with the $1.5 trillion asset manager Invesco, the fourth largest ETF issuer in the US. And according to contacts from inside BlackRock, which again I cannot confirm nor deny, and Invesco, spot ETF approval is a matter of when and not if. And I don't necessarily, but I do agree with that, but I don't also agree with it. I kind of disagree and I agree. And let me explain why, right? So I think that whilst Gary Gensler is in charge of the SEC, no ETF will get approved and potentially may even get rejected temporarily and get a reapplication, and that will then be approved at a later date. I don't buy into the idea right now that that you can see these spot ETFs getting approved. Not right away. I mean, we obviously all want them. We all want these things like BlackRock's ETF to get approved and so forth. But wouldn't that be the biggest kind of catalyst for major downside that we could see in Bitcoin, right? And who is going to profit from that? It's going to be the people who are going to be buying up ahead of time, such as BlackRock, who are going to know whether or not approval or rejection is there before the public do. I think essentially everyone's buying up into Bitcoin thinking that these ETFs are kind of like they're a given. They're going to happen. No one's going to get rejected. And, it's basically going to be a massive catalyst to the upside. And it will be a catalyst to the upside. I just don't think that it's going to happen in the time frame that people are expecting it to. Because I do think they are an inevitability and we are going to see them. I just do not think that actually we're going to see them under Gary Gensler's watch. I could be wrong on that, and hopefully I am wrong on that, because we all want these spot ETFs for Bitcoin to a degree, right? We want to see these kind of things kind of come to fruition. However, because people seem to think I say however with a TH rather than a V, it's however, and people can't seem to understand that. Anyway, regardless of the comment section of YouTube, I think it's going to be interesting. I think it is a matter of when. It is not a case of if, but I do think that we are likely to see some negative news around these ETFs before they actually get approved. Something is going to cause downside pressure because we can see in the charts there's a requirement for it. We don't know what's going to necessarily create it outside of the Fed pivot, which could be all that it is, right? It could just be a Fed pivot and then the approval, right? It could be as simple as that. But I imagine that there's going to have to be some kind of big shakeout from retail investors, and I just haven't seen what's going to create that just yet outside of Fed pivot or housing crises and things like that. So it's one of those. It's an interesting article. We'll kind of leave it there, I think, for now, and we'll see how things kind of develop over time when it comes to that. So we kind of briefly spoke about the 𝗕𝗓𝗊𝗀 exchange as well. I don't know if I can come back here. I'm pretty certain I saw something in here around Justin Sun basically depositing funds to 𝗕𝗓𝗊𝗀𝗀, but I can't see it in here right now. But yeah, for the most part, like it's an interesting one. I'm not sure that I would be necessarily trusting the 𝗕𝗓𝗊𝗀 exchange, which is why I tend to always lean on BitGet as my kind of go-to platform. Obviously I have access to as many different exchanges as possible. 𝗕𝗓𝗊𝗀 is never not one that I've actually really spent too much time looking at or actually signed up towards. However, I do have accounts with many of these other platforms such as Binance, Coinbase, Bybit, KuCoin, Gate.io, and so forth, right? But BitGet is my go-to platform. It's a nice, easy to use platform. I find it quite self-intuitive, and to be honest with you, I think they're going to become one of the biggest crypto exchanges in the world, and they're really ramping things up their side. So as I said many times before, there's an affiliate link in the description down below. If you do sign up to BitGet, which I do urge you guys to do, because it's great to have access to as many different exchanges as you possibly can, because you just do not know what's happening in a bull market. Can you log on to these platforms? Can you sign up to them? Can you move funds to and from those exchanges? You need to test these things out, obviously, and make sure you're very familiar with how they work. But if you do use the affiliate link in the description below, you'll be eligible for up to $8,000 in rewards, depending on how much you deposit and trade on the platform as well. So you've got nothing to lose here. Signing up to the platform, using the link in the description below, depositing, earning some rewards for doing so. But also, I think you'll find that this might become your go-to platform in the same way that it has become my go-to platform, just because of how easy it is to use, how good the platform actually is. And I think, guys, you will be pleasantly surprised if you do go ahead and sign up to BitGet. As I said, the affiliate link is in the description below. Moving on, though, because there are some positive stories from yesterday as well. So if we come down into our trading section here, we can obviously see that although we had a few negative trades, there were actually quite a few good positive long trades and short trades in the space within our Discord server as well. Okay, so it's not all negative. We got stopped out of a few trades, but there's actually a lot of green happening from the member sections as well. So let's dive into a few of these and see what's going on. So we've kind of got API3 short, 145%, which was great. So it's great to see that. We've got 88.82% on the short side for 𝗕𝗓𝗊𝗀, and we've got Bitcoin USDT long, 41%. We've got algo long at 62%, right? So some great trades going on here in both directions. You're able to trade the market in both directions, right? And the leverage, guys, it isn't extreme, right? We're talking 10x. This is reasonable leverage. This is, it's on the higher side of what I tend to like to do. I like to be between 5 and 10x. Sometimes, if I'm really confident about a move, I might put it to 20x. You won't see me above 20x, right? So always make sure you use proper risk management and things like that. You don't want to get liquidated just because you're a bit too greedy and things like that. You can see this one here at 25x, 126% as well. This is an STX USDT short position. As we kind of scroll through some of these as well, you can kind of see another one here, 123% shorting GMX. You can also see we have XRP shorts and things like that as well. So some really great trades that were going on yesterday, even though a few were stopped out on like VeChain, which I was looking for a short position on. I just didn't quite have my stop loss set right. And the same with Matic, which broke out of its structure as Bitcoin reversed up as well. So lots of great trades happening regardless of a few just negative ones, but for the most part very positive within the Discord in terms of our members trading really, really well. So I just want to kind of end the video there, I think, on some positivity within the space. If you found this video useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. The link for that is in the description down below. Until the next one, though, guys, have a fantastic day.